Hey everybody, welcome back to the channel. Today I want to go over the AM session, so from 8:30 to 11 AM on February 1st, Thursday, okay? So these videos are a little bit different. I'm not going candle by candle, so this is what the chart looks like. Let me zoom in just a little bit more for you so you can see it better. And before I put in these things, before I have you look and see what you see here, let's open the Kraken Silver Bullet indicator, and let's turn on the Asia, London, and New York Killzone. And well, we've already done the PM session, so all right. So let's see where those are at. Okay, let's just zoom in here. Okay, so Asia first. Here's London. Took the Asia low and Asia high, so Asia can come off. Starting this hour here, Killzone is still there. This actually starts here, so we take it out and go there. Okay, so Asia's, that's good, and then London high is taken, so London low. Okay, so we'll just take off Asia. Okay, so now let me zoom in here, and how would you have traded this? Okay, and let me show you, then I'll show you how I would have traded it. And I did take a couple of these trades, but so pause the video if you want. And I'm going to add the lipstick to it right now. So this is everything that I saw, okay? And I'll show you there's another one in here that I'll explain how you could have gotten in as well here. But the first thing I saw was this low was swept here, which is not one of the session lows. So that was a big low that we took out recently, a low that we just swept. So we came up and came up into this fair value gap. Here, this is still London high right here, which we're taking out right there. We've already taken it out, but we're just coming back to retest it. And then we leave a BPR, right? A balanced price range. We have an up candle, a fair value gap, and then a down fair value gap. They overlap. That's a BPR. So price is respecting that BPR, right? So it's respecting it. We have a fair value gap here, and it's also respecting it as well, right? So we're kind of caught in between these two, right? There is consolidation right here. Something's got to happen, right? You got a BPR holding down price, and you got a fair value gap at this point supporting price. Well, we finally break through this fair value gap, making it an inversion fair value gap. Okay, so for me, that tells me, hey, we're going short, right? And we already took out the London high, so I'm still waiting to go down here, right? That's where I really want to target down here. So I'm waiting for my market structure shift. Well, for me, an inversion is a market structure shift. So this came back up, and you could have entered anywhere in here, right? So I wanted to be up here. Obviously, you have these two fair value gaps here that aren't inverted yet, and so they're good. I wanted to see if it could come up to the second one. So you kind of got to wait and see what happens. You enter here, middle of the inversion fair value gap. You have plenty of stop to cover it. So you enter here and you take this trade. What are you aiming for? This low here, which we do take, but a 30 handle move right there. Now, as this low is taken, just draw this out here. After this low has been taken, right? This was taken. Price comes back up and retests that inversion fair value gap again, right? Now, I took this trade. I did not take this trade. This trade, what would you aim for? Well, you'd aim for the next low, right? After it's respecting it. It's respecting it. You probably want to enter over here. If it were me and I was going to actually enter this, I probably would have entered here, which is still there, and aim for that low. If I was going to take it, it's obviously supporting price. Here, it's not going above this. There's no reason to. So it comes back up, retests it, and then comes down, takes out this low. That's 40 points. I did not take this, but that's how you could have traded that, right? Bodies tell the story, wicks do the damage, right? So wick goes all the way through, but the bodies are still below consequent encroachment of this inversion fair value gap, right? Why is this a good inversion fair value gap? Because it was tested and it held price, it supported price before it became an inversion, right? Now this tells me it's supporting price here. I think it's gonna resist price down here, and it does. I mean, one candle closes above it, but it does pretty much support price or resist price rather. Right, so now we came down here, right? And so now here comes the 10 o'clock silver bullet hour. We don't hit London now, we're actually rejecting from it, right? So as we're just, coming back up, now we should see all order blocks coming up. We're going all the way back up. Like order blocks, bearish order blocks should support price, right? Going up. These fair value gaps haven't been filled in. Okay, well, obviously now we have relatively equal highs here, right? As price comes out, we got relatively equal highs. This is, to me, is relatively equal highs. Relatively equal highs. It stops and then it starts coming back down, right? You got a high here. You've got a high here, here. I mean, you've got all this right here to take out. So it comes back down. Where does it stop? Okay, so let's pull our fib from here to here. And this is 50%, like to the tick, 50%. Yeah, but how would you enter there? Well, I didn't enter here. I'm telling you, you can enter here. How could you enter here? Well, there's two different ways I see you can enter here. Can you see them? Let me mark them out for you. Now, if you want to use the bodies and or the wicks, that's fine. I'll use these. Here's an order block. I'll just use the, oops, wrong one. Sorry. I'll just use the bodies, not the wicks. So it's easier, otherwise it's just huge. You could also use this. I'll just use the body again. This breaker block. This is a breaker block. Why is that a breaker block? Well, let's turn on our line chart here. Low, high, lower low, breaks through, comes back, retests, breaker to go higher, right? So there's your breaker block. So you could have entered here. So if you would have entered here, let's just say you entered at the top of the breaker block, right there. Let's just do our standard. Let's do our 1 to 37. That doesn't even take us to this line, but that's about where I would have gone if I would have taken it, because I want these highs is what I'm aiming for. I want to be right below them so I can hit those. So it's low-hanging fruit. That's a trade that you could have taken, right? Okay, let's take off this fib here because there's not too many fibs here. Now, we took out this high, right? We took out all this liquidity. We took out this liquidity now. We just took out a New York Killzone now. So that's awesome. What are we expecting? We're expecting to come back and take out the opposite side, right? That's what we always expect. When we take out one side of our session, we're looking to see if price is going to give us signals and signs showing us that it's going to go the opposite way direction, right? Taking out session liquidity is very much similar to going into like a higher time frame PD array and rejecting from it, right? That's what we're expecting. Same thing here. Took out New York Killzone high, we're expecting New York Killzone low to be taken, right? So what happens? Well, we have a market structure shift here. Didn't mark it. We have an inversion for a value gap, which I'm telling you is, to me, is very similar to a market structure shift. Now, was this being respected? Absolutely. Look at the bodies. They all respect them until it's broken through. Even this one's holding. This is all holding price. It's all supporting all these prices, right? It's being supported. Then it finally breaks through and retest it. You could have entered right there. Right here. Just to show you where you could have entered, right? Didn't enter there. Wanted to see more. This is your market structure shift. Here's another fair value gap. It's being respected several times. And what are we aiming for? Well, we pull our fib from high to this low here, the first low here. And we get 2.5 standard deviations, which is below this, is not below this low here, which is what we would be targeting, which is also right after the New York Killzone, which we're targeting. So somewhere in here, right? This would be our first target, second target, third target, right? And you actually get all three here. All right, so that's how I would have traded the AM session on February 1st using the Kraken Silver Bullet Pro indicator and ICT concepts.